Why is the market expecting the Fed to cut interest rates while inflation is rising? And should there be a cut?
Yeah. Okay. So if you look at it, the Fed Reserve has a dual mandate. They need to keep, unemployment low, which for them is 4 point something,
Hmm.
low 4 point something, and keeping inflation on the measure of core PCE inflation, which comes out at the end of the month, down to 2%. Okay, so um, inflation is going up. Uh, Slowly but surely into precursors for inflation. Prices paid by manufacturers are going up. The producer price index, the wholesale index went up yesterday. And so we're starting to see, the working its way through the system to eventually start to hit, the consumer. And so if they raise rates in a normal world, when you're raising rates, you would have a situation where you're potentially stimulating more demand, which
Hmm.
could create more inflation.
Yep.
But this is different. And I think they can do a rate cut here. I'm not sure they should, but I'd be okay if they did it,
Hmm.
that's for sure. And here's why, because this inflation is not being caused by too much demand.
Yeah, it's by the tariffs are causing it,
Right.
and it could be a one-off inflation
That's
event.
right. And so, and what we're seeing, I believe, is more weakness than we had certainly by this time last year.
Hmm.
And so if you come in and you start to do rate cuts, you're going to make that less weak, right? It'll get better, but it might not get so much better that it creates this big demand influx because
Yeah.
money's so cheap. We're going to go buy all these things and we're going to do all these things. Um, so I think that it, their fear of igniting inflation by lowering rates once or twice this year, which is the big bet, right?
Yeah.
September, October. If you look at the market bet, it's betting for a decrease. I think that logic is what they're looking at personally. That because if we didn't have tariffs and we had a 0.9% wholesale inflation, there's no way they should do
They
any
they,
rate cut. No
they would be
way.
talking maybe possibly raising
That's
rates.
exactly right. Because now you're talking about without tariffs, this is demand driven, right? People are buying and buying and buying and going crazy. We need to slow that down. And they would start talking negatively like they do, right? They start saying, oh, the stock market's terrible, not in those words, but it works. And that's what they did in 2022. They do what we call job owning. And so, but this is different. The tariffs are being caused by sort of an artificial piece that's coming through, and even if it stays, it's a one-time thing.
Yeah.
It could be huge because I mean, 0.9%, if you had that every month for 12 months, is 10.8%. The average effective tariff is 18.6. So you could see 10.8 on
Yeah.
wholesale price. I have no issues with that at all. It would be dramatic. And I think that's the problem. And it would be so dramatic it might slow things down even more. And that's where rate cutting now instead of later could offset. You maybe get into a stagflation area instead of a massive recession area. So anyway, that I think that's why they're looking at it again. The stock market is excited, really excited about the possibility of rate cut. You can see it on a day-to-day basis as the
Yeah.
numbers
Whenever
come
the
out.
rate cuts go up, the market goes up.
Yeah, it's very, very directly related as far as that goes. And so I don't know that the rate cuts are that great. I mean, they're not even that much in effect. I
If
know
it's a
that,
quarter on a 4.5%,
right.
4.2 to 4.5, it's
Yeah,
not the biggest cut.
yeah, it's not going to make it. I guess it's still directional. Um, so anyway, that's if demand is literally dropping down because things are softening, which there's lots of reason that can be happening, and prices are still going up for an artificial reason for tariffs, you can still probably lower rates and bring demand up some without really affecting the ultimate price because there's not enough.
You're not generating enough demand to
Mm-mm.
cause it to continue to go up
No, I don't.
rather
I
than
don't.
the
I
two.
don't think so. Um, Especially at these small numbers that they're looking at. So I would err on the side. Can you look at that? The projections are the gross domestic product is going to drop even more because of these tariffs, and so again, you're trying to prop up demand that's already falling. You're not going to create inflationary demand when demand is coming down. You have some room to cut rates to kind of keep demand even where it is, and the prices will still go up because the impact of tariffs are still coming in, but you can't stop that
Hmm.
other than making demand go down even more, which means creating a recession, which honestly I don't think they want to do that either. They are very concerned about not being a situation like we had in the 70s where inflation got out of control. That's for sure. So anyway, it's a great question.